hopefully the Fed won't be raising interest rates anymore, because if you compare us to, as an example, President Obama, he had 0 interest rates. Anybody can make money with 0 interest rates. I'm almost at a normalized interest rate, and yet our economy is soaring. Our jobs are soaring. Our businesses are doing tremendously.
All right. The president, in his interview with Harris Faulkner of Fox News here, making it very clear, I don't really think it would be a good idea for the Federal Reserve to raise interest rates next week. Whether that amounts to a threat, of course, it's the eyes of the beholder here. The Federal Reserve is kind of in a no-win situation then. If it opts to raise interest rates despite that, hell to pay. If it doesn't, even though the economic conditions might justify slowing down, people will think that, they're kowtowing to the president. Let's get the read from Charlie Gasparino, market watcher Joe Fahmy. Joe, what do you think of what the president is saying right there?
I think interest rates is one of the many hurdles the market's dealing with right now. I think, as you just said, they will do it. They don't want to not do it just because he said that. So I think they'll go a quarter. What the market needs, though, is...
So a hike will still come.
Hike will still come, but they need some sense that there won't be 3 or 4 next year. Because, and even then, the market still has the hurdles with the China trade wars and ECB and all sorts of problems, other problems. But interest rates is definitely one hurdle that I think if they can announce that they're going to stop for next year, that's going to be bullish for the markets.
What do you think?
I think, if this was, at another time and place, he would have gotten Michael Cohen to, hustle Jerome Powell down from those interest rate hikes. Don't you think? Cohen would call him up?
No, I don't think that.
There's a little Luca Brasi there. But that relationship is soured, as we know. Yes. Listen, I agree a lot with Joe. The problem that the Fed has is that when you keep interest rates, and I know he said like Obama had 0, which he did, where the interest rates are right now is not that much above 0. We're not talking about this is not, the Fed, squeezing inflation like.
What are we at, like 2.5%?
Yeah. They usually want to get to 5 so that the no recession comes and they have room to come back down.
Now here's the problem.
5 is the norm, right?
Yeah, 4 to 5. There, are we? No, but I don't think the market can handle that.
Yeah, but here's the problem with keeping it this low, because it's still pretty low. It's off 0, but it's still very, very low. Companies borrow more, and if there's anything, if you're worrying about like something that a tsunami that could hurt the economy and lead to something like 2008, I'm not saying that's going to happen. It is essentially debt and corporate debt levels. I mean, like GE, for example. This gives you a great example. GE, a couple of years ago, when they bounced out, Nelson Peltz was now the activist investor. He prodded the board and the company, and then it was the CEO, John Flannery, to buy back stock and use debt because debt was really cheap. Right. Now they bought it back at 17. Now it's at 7. Okay, I mean, when you have interest rates this low, you make a lot of stupid decisions based on the fact that your cost of capital is low at the time.
Well, and that's assuming that if they're a little higher, you'll make fewer stupid decisions.
That's true, but that's not assuming. That's an economic fact.
But if the Fed doesn't hike, does that tell that they're not independent and that they're giving in to Trump?
Because
or is
I would think that would panic the markets more.
Right. Do you think there's a problem that there's something bigger going on out there?
Joe, well, I do want to get your reaction. The president also talked about China trade, the prospects of a deal with Harris Faulkner. Take a look.
I know what I'm doing. I mean, it's business. Nobody ever went to China and said, listen, you're stealing our intellectual property. You're doing all sorts of things that are wrong. You're taking out of our country $500 billion a year. You can't do it. You can't take $500 billion out of our country.
Tariffs on us? You're not worried about that?
No, because what happened is the disparity is so great. We do $525 billion with them. They do $100 billion with us. So they do 5 times more. It's really more than that.
He's talking about the amount of the surplus, the trade surplus that the Chinese enjoy with us, and he's going to keep fighting that. What do you think?
Yeah, I think this is going to drag out longer than people expect. There's even been rumors that President Xi is going to wait till 2020, hope Trump doesn't get reelected so he has someone easier to negotiate with. If that happens...
Oh, he would drag it on that long?
If that happens, that's going to be trouble. I don't want to be too negative. I'm just saying that this is not something, even if they announce and the headlines have come out, we've seen 50 headlines, we're making progress, we're not. We are. Even if they make progress from there, it's still going to be another 6 months or so to finalize those details.
And we do know their past record, right? The Chinese, they make commitments to Republican, Democratic presidents alike, and they have a devil of a time following up.
Yeah, I think he's right and wrong. I mean, where he's right on is obviously...
Joe or the president?
Both.
Okay.
No, I know more the
you
president.
like Joe.
More the president than you. But,
right.
he's right in the fact that China steals stuff from us, particularly intellectual property. he's wrong in the way he's approaching it. The tariff stuff just doesn't work. And, you know, he needed a much more concerted effort or coordinated effort with other trading partners, the Europeans, which he didn't do. And I think that's the real problem. And that's why the markets are so worried about this. It's not a coherent trade policy of isolating them on the one thing that is really bad with them. By the way, trade deficits aren't bad. We have a trade deficit with other countries because we're prosperous and we buy stuff. It's a really bad measure of the economy.
But you do raise a very good point. And, John, I want to follow this. I feel the longer this drags on, the more the markets are going to want to see some teeth in this thing, not just a promise to buy more from us, not just a promise to open up your markets more or scoop up more soybeans from our farmers. Every day that goes by means that kind words are not going to be enough, lasting, you know?
Well, that's my point. Even when we do get the headlines that we've made progress and almost finalized this, it's still going to get, like you said, the market wants details. It's still going to take time to get those concrete details.
I mean, they'll still jump on the prospects of it, but they're also going to look under the hood, right?
Yeah, and again, his trade policy with China is somewhat incoherent. I mean, I like President Trump, but think of it this way. Trade deficits, he keeps talking about that, they don't matter that much. We have a deficit with all these countries, a lot of them, when we're very profitable.
Making your markets matter with it, right?
That's a problem. Right. They steal stuff from us, and that's a different issue. And he's conflating both of them and basing a policy on two things that are disparate. I mean,
but if he succeeds in this and gets something substantive, that would be a big development.
That'd be, Like I said, the biggest headwinds right now are the interest rates and the China trade war, for sure. There are other headwinds; those are the biggest ones.
But we're still going to have a massive trade deficit with them.
So who do you think has, let me ask you, who do you think has the upper hand right now as far as in this negotiation? Is it China, who's, U.S., because China's markets are hurting, or is it China?
I don't know. I mean, it's hard to say because we don't really, the fine print on most of these trade deals he does is pretty weak tea. I mean, if you looked at NAFTA.
Well, the consensus, I always, go against that. It says that China's a lot more to lose than we do.
No, but how about NAFTA? That deal was pretty weak, and this deal looks like it's not. We're still going to have a trade deficit.
We shall see. Gentlemen, I want to thank you both very, very much. Joe, you survived. That's a good idea.
I survived.
Oh, no.
Where do I begin?
Okay.